Let's go first to a couple of things that have happened. Gold and Bitcoin touching, new highs, and I wonder if we deal with these together or separately. Let's go with gold first, because some people drawing a link between some geopolitical developments, some risks to perhaps seizing Russian assets in places and what's going on there. But what's your take?
Yeah, first of all, I do think gold and Bitcoin are kind of related, but I think they are, you can't trade them exactly similar because they have like very, very different beta to the kind of global markets, as you said, the geopol, and then just they can get really, really stretched kind of moves. So Bitcoin is a slightly more leveraged play. I do think that the political, geopolitical backdrop makes gold a bit more of a buy. It still plays into the idea that the Fed wants to be dovish. So even though we've seen a reduction of rate cut cuts in the US, we still have the idea that we're going to get easier policy this year, and that's a good backdrop for the gold, particularly if the dollar is going to start turning lower as well.
Yeah, and what about Bitcoin then? I mean, this is just a measure of risk appetite, and if we are expecting rates to come down, then that's, there's all kinds of new coins being talked about.
It's a measure of liquidity. It's a measure of exuberance out there. I think now that we've kind of got to that new all-time high, I think we've kind of taken out a lot of the barriers around there. Look, short term from here, I think that the next 10k or so is probably lower, not higher. This is not some. I hesitate to make any long-term call on Bitcoin. You never think you should short an asset like that can go crazy on you. But I do think that probably the next 10k is probably lower, even next 15k. I think we've got through that brief stage of a kind of exuberance. I think it's going to squeeze lower from here.
What do we watch then from Powell today?
I'm really trying to calibrate this because, excuse me, I think Powell will be more hawkish than he was, say, a couple of months ago. But the problem is he doesn't want to suddenly turn explicitly hawkish. And I'm trying to work out where the market expectation is there. I feel like we hit a barrier of 3 rate cuts and we can't kind of squeeze higher in yields from there. Will Powell say enough today to really kind of get people to go, wait, the dot plot in March will only be 2 cuts? Or will people try to cling to the 3 rate cuts until we actually get the March dot plot?